Good morning, viewers. It's Monday morning, March 24, 2025, and I'm your host, Sunil Thakker of Sunny Talks Money. Welcome to ST Money's 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap, accurate figures and numbers. Stocks edged higher in the final minutes of Friday's trading session after a week of big swings. Wall Street edged higher and the dollar gained ground on Friday after US President Donald Trump hinted he would be flexible regarding a new round of tariffs expected to be imposed early next month. All three major US indexes reversed their losses after Trump's announcement, but their gains were held in check by weakness in economically sensitive sectors such as chips, materials, and small caps. At close, the Dow Jones Industrial Average rose 32 points or 0.08% to 41,985. The S&P 500 rose 5 points or 0.08% to 5,667. And the Nasdaq Composite rose 92 points or 0.52% to 17,784. All three indexes registered weekly gains, ending the week in the green. The Dow Jones Industrial Average led the way for the week, up 1.2%. The S&P 500 rose 0.5%, and the Nasdaq Composite added 0.2%. Even so, lingering economic uncertainties and churning geopolitical tension kept out investors cautious. Concerns over the impact of President Trump's trade policies continue to hang over the market. The European Union has said it will adopt retaliatory tariffs against the US in April. Investors await clarification on details of Trump's reciprocal tariffs expected to take effect on April 2. The S&P 500's communication services and information technology sectors, last year's market darlings, have been among the hardest hit by shifting tariff news. Meanwhile, Nike and FedEx were among Friday's big decliners after disappointing earnings. Market saw a brief relief rally midweek when the Federal Reserve held its projections for interest rate cuts broadly unchanged. The common theme among monetary policymakers was cautious, with most adopting a wait-and-see stance toward Trump's tariffs and trade policy, which has fostered what Fed Chair Jerome Powell called unusually elevated uncertainty. Israeli airstrikes on Gaza and a huge blast from a Ukrainian drone attack on the Russian military army airfield also dampened risk appetite and raised the appeal of safe haven assets. Adding to the turmoil, Britain's Heathrow Airport was shut down to a huge fire at a nearby electrical substation. The shutdown of London's Heathrow Airport, a major international hub, snelled air traffic on Friday and knocked European airline stocks. Shares of American Airlines and United Airlines rebounded from morning dips after some flights resumed late Friday. Treasury yields rose slightly to 4.25% on Friday, but were down for the week. The yield on the 10-year Treasury has declined 7 of the past 8 weeks. This week, it fell 0.05 percentage points to 4.25%. Copper prices edged up, settling at their second highest level in history. Gold was off sharply from its all-time high, but remained about $3,000 per ounce, a level it breached last week for the first time. Gold paused its record run, dipping in opposition to the dollar's stronger dollar, but notched its third weekly gain. Spot gold fell 0.8% to $3,020 an ounce. US gold futures fell 0.58% to $3,022 an ounce. The dollar index, which measures the greenback against a basket of currencies, including the yen and the euro, rose 0.33% to 104.13. Crude oil prices edged higher and appeared set to notch a second straight weekly gain as new US sanctions on Iran and the latest OPEC output plan raised expectations of tighter supply. US crude rose 0.31% to settle at $68.28 per barrel, while Brent settled at $72.16 per barrel, up 22.22% on the day. US economic indicators in this coming week will include housing and industrial data. On Thursday, the Commerce Department will give its third and final take on fourth quarter GDP. Its personal consumption expenditures report is due on Friday. Clearly, these are challenging times for investors, with volatility and uncertainty on the rise. Angst is swaying sentiment, while tariffs and their associated implications are rattling consumer and investor confidence. Really, this is the calm before the storm. That's the wrap for today, my dear viewers. And if you got value from this, please do subscribe, like, and share this video as much as possible. You can contact me at st@st-money.com for any further information. I will see you again tomorrow morning. In the meantime, happy investing, stay inspired, and remember, it is all about money.